Let's bring in our friend Eddie Ghabour. Eddie, good morning to you. You think rates will stay low and inflation stays high. You say good markets for the next month, and then the game is going to change. What do you mean by that?
So, look, I think the market has really been giving us clear signals over the last month that we're going to be heading into a much different economic environment next year. And that's why we've been pounding the table on repositioning your portfolio versus just buying and holding, but reposition your portfolio in a way that you're lowering the volatility. The interesting thing, if you're looking at the markets, is the last month during this rally that we've seen, real estate, staples, and utilities have been some of the bigger performers. So we're already starting to see that flight to safety. Next year, we are going to see GDP really start to decelerate. And my biggest fear is people are not going to be positioned for that. And when you have GDP decelerating and a Fed that's forced to tighten, that's not going to bode very well for risk assets. So I think we're going to see extreme volatility in the first 6 months of next year.
We will buckle up. But getting back to real estate, you say that's the best hedge against inflation, right?
So, yes, in my opinion, real estate is one of our favorite sectors for next year because the dynamics of real estate are going to continue to be very powerful next year. Inventories are still near record lows. Interest rates are going to stay very low. And rents are going to really have to start increasing next year because the appreciation of the housing is going to force more to rent. So the best way to profit from it is to own it. It's a good hedge. It can lower volatility. And I think the performance will actually be very good next year.
Didn't gold always used to be the standard inflation hedge? Are you buying any gold?
We will be adding gold more than likely in February. Gold is where you want to go when you want to start to when things really start to break down, because that is the ultimate flight to safety. That's why it hasn't performed well the last 12 months. So we've told clients we are going to be adding gold more than likely in February because we think that's really when the markets are going to start to get extremely turbulent, and gold should hold up extremely well in that environment as well.
Terrific stuff. Eddie, thank you so much for your insight this morning.